Today I'm breaking down a super simple, extremely practical scalping strategy that traders love because it's clean, repeatable, and honestly, kind of stupid simple. But before we jump in, this video is for education only, not financial advice. I'm not promising profits, I'm not telling you what to trade. Always do your own research, and remember that trading involves risk. Now that we've got that out of the way, let's talk about why this strategy works almost every single day the market opens. So grab your coffee, relax, and let's get into it. Why scalping matters. Scalping is one of the most misunderstood styles of trading. People imagine it as stressful, chaotic, and super complex. But the truth is, scalping is perfect for people who don't have huge capital, don't have hours to sit in front of the charts, don't like holding positions for long, want quick, controlled trades, and love reading price action. And yes, scalping can be risky if you're emotional or undisciplined. But with the right system, simple, rule-based, and consistent, it becomes a skill that can be learned. And today, I'm giving you exactly that. Strategy name, the 3C Scalping System. I call today's method the 3C Scalping System because it's built around 3 core checks. 1. Candle direction. 2. Confirmation indicator. 3. Clear entry and exit zones. When these 3 conditions line up, the trade is high probability. And the best part? It works in any liquid market. Stocks, index futures, crypto, doesn't matter. The chart setup. Let's begin with the chart setup. Simple, clean, no clutter. Time frame, 1 minute. Indicators. 20 EMA. 200 EMA. VWAP, volume weighted average price. That's it, number 10 indicator mess. No fancy oscillators. Scalping works best when your chart is simple. 1. The first C, candle direction, trend. The first thing we look for is trend direction. You only need to answer one question. Is the 20 EMA above or below the 200 EMA? If 20 EMA greater than 200 EMA right-pointing arrow uptrend, if 20 EMA less than 200 EMA right-pointing arrow downtrend, this is your first C candle direction. Trading against the trend in scalping is almost always a bad idea. 2. The second C, confirmation indicator, VWAP. Next step, confirmation. VWAP acts like the intraday fair price. Institutions look at it. Scalpers look at it. Algorithms use it. Here's the rule. In an uptrend, price should be above VWAP. In a downtrend, price should be below VWAP. This gives you your second C, confirmation indicator. If the trend and VWAP don't agree right-pointing arrows, skip the trade. 3. The third C, clear entry and exit zones. Now for the fun part, entries. You're not entering randomly. You're waiting for a pullback. Uptrend entry setup. 1. 20 EMA above 200 EMA. 2. Price above VWAP. 3. A small red candle forms. The pullback. 4. Enter when the next green candle breaks the red candle's high. Downtrend entry setup. 1. 20 EMA below 200 EMA. 2. Price below VWAP. 3. A small green candle forms, pullback. 4. Enter when the next red candle breaks the green candle's low. The logic is simple. Market pulls back right-pointing arrow, buyers or sellers re-enter right-pointing arrow, momentum continues. Risk management, stop loss and target. Scalping without a stop loss is basically a disaster waiting to happen. So here are the rules. Stop loss. In an uptrend, place SL below the pullback candle's low. In a downtrend, place SL above the pullback candle's high. Target, risk-reward. Best risk-to-reward ratio for scalping, 1 to 1 to 1 to 1.5. So if you risk 5 points, your target is 5 to 7.5 points. You don't need 20 trades, just 3 to 5 quality trades per day. When to avoid the trade? This strategy works best when the market is clean, but you must stay out when conditions are bad. Avoid trades when price is chopping around VWAP, the 200 EMA is completely flat, the market is sideways. During major news events, CPI, FOMC, Fed speeches. Candles have huge wicks showing indecision. Scalping only works when momentum is real. The scalper's mindset. This part separates the winners from the frustrated traders. Scalping is 80% psychology. If you chase every candle, try to force trades, trade emotionally, take revenge trades, avoid using stop loss, or try to make back losses instantly, you will struggle no matter which strategy you use. Winning scalpers have checkmark patience, checkmark discipline, checkmark quick decision-making, checkmark respect for stop loss, checkmark NO ego with losses, checkmark NO fear with good setups. Scalping is a skill. You get better with practice, not luck. Example setup. Let me give you an example of how clean this setup looks. 20 EMA above 200 EMA. Price above VWAP. A small pullback red candle. Next green candle breaks the high, right pointing arrow entry. Stop loss goes under the pullback low. Target. 1-to-1. This type of setup appears almost every single day on liquid markets. And that's the full breakdown of the 3C scalping system. Simple, structured, repeatable, and perfect for intraday traders who want clarity instead of chaos. If you want me to create a downloadable PDF guide, a risk management checklist, or live chart examples, just comment and I'll make it. Make sure to like the video, subscribe, and turn on notifications, and I'll see you in the next one.